not only raise capital, but if you're getting a strong return off it, essentially getting a free marketing campaign as part of it, bringing in a large audience, how many impressions are taking place, how many new signups for your email and for your database and your social channels are you getting, and how many investments are you getting, and the people in between that you can use towards the next round. What does that mean for the space? The first reg deal we worked on, the client was featured as a Forbes 30 under 30 for energy and pointing at the success of this campaign.
Hey, you're listening to Cracking the Code, the podcast for leaders building and growing service-based businesses. If you are in legal or medical or financial services, if you have letters behind your name that qualify you to do what you do for a living, you are in the right place. I am your host, Rob Riggs, here to bring you intel and access that are designed to decode how technology can be and should be impacting your growth. All right, let's get into it. All right, welcome back to Cracking the Code. Today's guest has done something that most marketers only dream about. He's orchestrated 9-figure fundraising campaigns, powered over 750 brands, and built a digital agency that sits at the intersection of performance marketing and high-stakes capital raises. Jason Fishman, thanks so much for being here. Why don't you take a second and introduce yourself to people who may not know who you are?
Thanks, Rob. I've been looking forward to this. Pleasure to be here and be speaking with your audience as well. As you mentioned, I run a marketing agency, DNA. Agencies need a niche, a specialization. We found ours as a growth marketing firm in investor acquisition. So as you mentioned, we've worked with over 750 brands. Over 500 of those have been capital raises. So we'll target investors. For some of them, it's limited to accredited investors, high net worth audiences. Others, it's retail, it's customers, it's the term investimers, and is actually used as a growth tactic, and raise millions of dollars at a higher return on ad spend. So I showcase a lot of the results of my podcast, Test Optimize Scale. I put out educational series and talk at conferences, try to be an open book. Also work with these groups post fundraising towards their next milestones. They're able to come in at a higher valuation on their next round. So I have a lot to share about how digital traffic can be used towards growth in the next metrics you're playing for.
Very cool. So that's a very narrow market, I'd say. What are the tips and tricks that you see like work really well with people that are looking to fundraise, looking to set up to grow, with funding in a PE and venture, whatever, versus somebody who is just like lifestyle business, growing grassroots, bootstraps, that kind of thing.
Yeah, there's more similarities than differences,
Really?
Rob.
Okay.
Absolutely, especially from the high level view. You're targeting very specific audiences, driving them down marketing funnels, measuring conversions. The majority of these campaigns are Reg CF or Regulation A plus. What does that mean? Regulation crowdfunding. Regulation A plus, you can raise up to $75 million with the filing. Some companies even use it to go public and direct list. Public companies could do it for priced rounds. Reg CF, you could raise up to $5 million from accredited or retail investors. So you can market to your customer base, B2B or B2C, and look to have them become shareholders alongside you. You're talking smaller investments, maybe around $2,000 as an average investment, but to get 1,000 investments there, that's $2 million. You could keep spiking it up. Similar to, that lifestyle, let's say B2C company, in the sense that, we're playing for 1%, 2% conversion rate, may need 50,000, 100,000 visits to get those 1,000 investments and $2 million. But then beyond the capital, you have these ambassadors who are sharing what you're doing. They're bringing different opportunities to you as well. I've seen merger and acquisition opportunities, franchise opportunities, publisher opportunities. Right and left, you're getting more value from the marketing and the people that you're bringing through.
Okay. Yeah. Nice. Are there patterns that you see in the companies that are like growing gangbusters, like 10x their results versus the ones that kind of just plateau?
Sure. The more social proof, the more third-party validation, the better. Similar to B2C, right?
Yeah,
Similar to
right.
B2B and buying decisions. If I'm looking at a new publisher, a new AI, a new SaaS platform, I kind of want to hear some referrals or validation from my network. The more of that, the better. I would tell you that it oftentimes reflects what I'm reading about in the media that week. So if I'm, really diving in on influencer AI softwares, I'll probably see an influencer AI company using this exemption, using these vehicles. We're
Right.
working with one. They've raised over $54 million on the Regulation A Plus campaign, a company called Rad Intel. If I'm, I remember a few years ago, I was reading about Elon Musk and tunnel boring, and then, we got an inquiry from a tunnel boring company. So it often tends to reflect what's in the market at that time. But it could be a brewery, a restaurant, and looking to bring their patrons in to invest in their next location. It does not have to follow one specific path or vertical stereotype.
Okay, yeah, nice. That's funny. So you brought up social proof, and I use this example, quite frequently, but have the opportunity to experience it myself again as a reminder. But like like people, the way people buy has changed over the past 20 years, and dramatically because of search and the implementation of the iPhone and social at the palm of your hand. I realized that when I was making decisions about who I was going to work with, I was looking for a service provider. I don't remember who, but uh, I wasn't looking for. There were several people, and some had 5 stars, and some had 4.7 or whatever. But I trust somebody with 1,000 4.7 ratings, right? More than like 10 5-star reviews, and that
Yeah.
shows that the volume of getting out there into your market is extremely powerful. You coach people, your clients, in terms of how to think about that, in terms of how they approach their market.
We absolutely do. It's exactly as you said. You're seeking out opportunities that have a line around the block. A
Hmm.
crowd sale, one of these capital raises, even if it's just to accredited investors, but with $0 raised, with under $100,000 raised, it
Yeah.
feels like an empty restaurant. Product looks good, interior design seems on point, but no
Yeah.
one no one's here. Is there something we don't know about? Why
Right.
why is this company hidden so much? They can't be of value compared to the company with thousands of reviews, like you mentioned. So a lot of a crowd sale is, bringing that initial tranche in many cases. First degree network, we're talking small investments. You get, 50, 100 people in. Many of them just want to support you and what you're doing, be along for the ride, be shareholders alongside you. And you get that first 100K, 200K, and you point to that with your messaging. Hey, we have over 100 investors. We've raised over, 200 grand, whatever it looks like. That goes a long way. All right, there's something here. I'll take a further look. You get back a week later, 2 weeks later, there's $500,000 raised. Hey, this is really moving. Imagine seeing that vendor and they had 10 reviews. Now they have 47. The next time you get back, they have 130. You're like, oh, okay, these guys are picking up. Maybe I'll try this out. Maybe I'll add, something here and add it to my portfolio. But we really base our decisions so much these days on that. We don't believe what we see online. So the more of that we're
Right.
able to showcase, the better.
Yeah, absolutely. So you've worked obviously with private equity, venture, angel, but talk to me about crowdfunding. You've run some crowdfunding campaigns as well, right?
Yeah, those Reg CF ones, they're
So
crowdfunding.
yeah, so
And
yeah,
basically e-commerce for the stock. Yeah.
uh-huh. And is there a difference that you'd see between crowdfunding and then getting really specific into the financial market where people are looking for certain return from their capital?
I think you kind of nailed it there. If I'm looking at a Reg D 506C campaign, long name, it just means you can solicit accredited investors, individuals with high net
Yeah,
worth, high household income, and the minimum investment's typically higher. I'd say most commonly 25 to 50K, which is low for many of our clients. Some of them are, 100K, 500K. I've worked on some with 500K. I'm speaking in groups where it's $1 million minimum investment. So big
sure.
contrast there from a Reg CF, regulation crowdfund campaign. Some of the minimums are 100, maybe the highest $1,000 on a Reg CF. So very different. In some cases, in some markets, it's easier to get conversions for those $1,000, $2,000 average investment campaigns. there can
Right.
be a serious, news cycle, war, all different types of things that could be affecting the public markets that day. Where with the right storyline, you can still get investments, you can still get in conversions, pixel event purchases. You're getting purchases of the stock on those days where the larger investors may be more reserved. We have med tech clients that have said, hey, over the past year, funds have really dried up for us. We're now exploring these alternative vehicles, but even using Reg D, I would point out a longer sales cycle, an offline conversation in many cases, and more touch points. So it
Yeah.
could be more of a 3 week, 3 month sales cycle to get an investor in. That may be for 250K. Again, small in a lot of private equity circles, but with the volume, it's still more of a crowd and still stacking up. Across both of them, again, more similarities and more social proof, more third party validation, more momentum. But as you mentioned, many of the Reg D campaigns, they show IRR. They're showing what your return's going to be. Some of them have these set terms and when it's paid back, what it's paid back, at annually. So a lot more numbers, if you
Sure.
will, on the Reg D campaigns.
Got it. So, how does somebody, so the the preparation to launch a Series A, et cetera, is pretty intense, but and more intense as you go along. But what about crowdfunding? How does a company who's considering like crowdfunding as an opportunity for fundraising, what do they need to get ready in order to launch that campaign?
Sure. Sure. So, I started as a growth marketing firm. I found fundraising to be a common theme, a common
Mm.
initiative here. And I learned about these vehicles, said, hey, with my advertising background, I used to run a mobile advertising network working with Fortune 500s. I could run advertising, I could target by net worth, household income. So I find more groups are exploring this than not. And there is an administrative process, something we're not really involved with your Form C, your Form 1A, your Form D. You have to file paperwork with the SEC.
Sure.
You'd want to work with a lawyer. You'd want to work with an accountant on that. They're going to speak further about your valuation and comparables. I will say you could likely get a more favorable valuation going to the crowd versus more of the traditional VC type conversations and negotiations. We work with many VCs, not to speak down there, just saying you
Right.
could likely get a larger level going to the crowd. And I would then say dive heavy into your marketing plan. I've built a
Sure.
model called the 8 point plan. I could talk about the competitor audits and determining who you're reaching, which channels, which messaging, the projections. I could get into all of that. But I would say have a well-oiled machine of a marketing program built and start testing it beforehand. Start building your audience. You may have to be careful about what you mention and what's compliant, what's not. You could do what's
Mhm.
called a test the waters campaign and start getting reservations in and take it live once you're to a higher level. But marketing is often an afterthought with these capital raises. Founders, CEOs hear how much they can raise and are just fixated on that number and then getting the deal live. I would actually put extra effort into the offering page and pitch video on there as well too. Not all issuers use pitch videos. I would absolutely do one, and that's going to be your selling machine. That's where you're driving the traffic to. That's your broker dealer investor relations agent, if you will. But basically, the higher conversion rate you get there, the better your campaign's going to do, the more scalable it'll be.
Right.
Hey, this is Rob Riggs, and I wanted to take just a second to tell you about Code Conspirators, our sponsor here. And we are a technology-focused performance marketing agency serving professional service firms. So that's legal, medical, financial, engineering. If you take a test to do what you do for a living, we help you grow your practice with websites and apps and software and performance marketing. That's organic, paid ads, retargeting, conversion optimization. And we're also doing a whole host of things with CRM, AI, and automation that's been bringing our clients tremendous value. If you're curious at all, go to codeconspirators.com to learn more. Now back to the show.
You think the perspective that with crowdfunding you've already got kind of a built-in market there, rather than like a venture cap, you got to go like we're going to go build it. We're going to go into our closet and build the thing, and then we're going to like push out to our market.
Yeah. So some of the issuers, some of the companies issuing investment opportunities, and I've focused a lot on equity. You could do this on debt. You could do it on convertible notes, revenue share, safes. There's a lot of different ways to structure it. Some of them are listed on portals. They're essentially FINRA regulated portals and marketplaces with a volume of these deals live. Could be
Yeah.
10 to 30. Some of them have over 200 deals live. WeFunder over 200 deals live on it. And they have audiences. As you hit different milestones, they'll promote to those audiences. They have to treat each issuer the same, so they have a structure, a system on how they do it. So there is a bit of a built-in audience, different ways to market to their audience as well too. Um, and that's part of what I love about this approach is you're not limited to your first degree network or your network, your second degree, audience. You
Right.
can advertise, you can do outreach, you can run, different webinars and road shows to go well beyond the people you have that you speak to on a daily basis to come in as investors. So the marketing tools are really what's attractive about it to me. And then as you're doing well on these platforms, back to that crowd effect, you'll see your campaign get to higher and higher levels, but you need to bring some of the momentum on your own.
Yeah, sure. So let's dive in, if you will, to your 8 point plan. How does somebody get prepared?
So I typically do it over the course of a month, two
Okay.
sections a week. We have some clients that will streamline into 2 weeks. I've run half day workshops and put together, base level strategy. But week one's the industry overview and competitor marketing audit. We want to know everything we can about, 2 to 3 different verticals that you touch. So, as an example, if I was running an investment crowdfunding campaign for my agency, I wouldn't want to just look at marketing agencies. I'd want to understand the industry space, the growth, some different stats and numbers I could reference. I'd want to look at investment banks and different types of groups that raise capital. So, I'm looking into both areas we really touch. I'd also look at investment crowdfunding because I'm about to run an investment crowdfunding campaign. So, I'd pull those stats out. Next, the competitor marketing audit. I want to know how all of the groups in these verticals are obtaining digital market share. There's something to take from each. So I'll go to Facebook ads library. I'll see what ads they're running. I'll go on some search platforms, SEMrush perhaps, and look at, what ads they're running, what they're ranking for, what type of traffic volumes available for some of these keywords and how competitive they are. I'll go on a platform where I can look at email newsletters they send out and other email newsletters that feature them. One you can use is called Milled. I'll look at Google News. I'll look at social media platforms, their posts, where they're getting the most engagement, which conferences they're speaking at, which podcasts they're a guest on. I want to know everything they're doing to get
Right.
the investors that I'm going to be targeting and the other verticals to get the customers that I'm competing against outside of the round to then formulate what I want to go to those same audiences with. And then I'll map out the target audiences down to the persona level. I want to know what they do on the weekends. I want to know what sites they go to. I want to know who influences them. So once I get to the channel section, it's, okay, we're going to prioritize these channels for advertising, these channels for organic content. The following week is creative and partnerships. So initial content calendar, the first ads that we're going to be launching, full process around this, of course. Partnerships, looking at admins of audiences that reflect my target markets, and then outreach to them. How can we collaborate? This could be publishers, this could be groups of investors, could be larger investors that could bring others as well too, but an outreach approach. And the final week, going into projections and activation. So only way to measure is with numbers. Let's
Yeah.
have an algorithm put together for impressions, clicks, conversions, how many times a piece of content or an ad's been seen, how much traffic it's driving to the offering page. Talked about how important the traffic is, and if I'm getting average conversion rates, average investment amounts, what that looks like each month from each channel, shows me where I need to optimize if any channel's underperforming, and allows me to see key drivers that I could scale into quicker, those that are surpassing the projections. Activation and executive summary of the entire strategy. A strategy is more about the process than the finished plan, but being able to depict what the takeaways were. A lot of ways to use AI to put this together. You got to be very detailed about the prompt. We've spent months and months and months and are still perfecting different ways we can make stronger and stronger strategies and pull more research with the prompts. But I would say if you fail to plan, you're planning to fail. Hey, we're
Yeah.
going to test this out, see what happens. In the back of your mind, you have reservations. You're a little skeptical on whether it's going to work. lean fully into it, determine exactly where we're going to get the traffic from, the exact messaging they're going to reach those audiences from, and how it's going to, outperform the competitors.
Nice. So a month is really fast to make all that happen, right? Is this
Relatively,
a
yeah.
yeah? Is the what's the level of effort from a client's perspective, from the client side, and then from your team side?
Sure. So you're absolutely right. Major agencies, major brands, they could spend months,
Yeah,
half a year putting this together. And that makes a lot of sense for their campaigns. Uh, we work with, mid-market companies, work with, public companies on price rounds, as I mentioned. Uh, in some cases, working with solopreneurs. One
yeah,
budget has to produce the next. We like to be efficient. We look at it as, smart entrepreneurial marketing. We've used that tagline in the past. And it basically has to fit into these timelines in many cases where we're going live in 3 weeks, even a month's too long. What can
yeah,
we have some stuff go live during the third week but then finish during the fourth week? So it's
yeah,
all a matter of being efficient with the time. I would say daily communications, weekly reporting call to show, hey, this is exactly where we're at, this is what we're doing next week. Going to go through it line by line with you. Want to get your feedback, want to make the changes. We're going to be stacking on top of this. Each section leads into the next, figure out the
right.
target audiences before we figure out the touch points, before we figure out the creative that's going to go into each of those channels.
Mhm.
So it is, balance. We are locking arms with the client. We're working on behalf of them and looking to build it up from there. And I'm describing the agency model right now. I would take the same approach if I was in-house at a company and doing this internally. Hey, this is our formal Thursday meeting. We're talking about where we're at on the strategy. So I would still use this approach, even if you're not collaborating with an agency.
Yeah, sure, sure, sure. Conventional wisdom says run from startups because razor thin margins. It is like this month has to fund the next. But you've seen the opposite, impact, or at least you've seen startups, launch successfully. Is there a secret to making that work at a low budget?
So test optimize scale, something I
Yeah.
say a lot.
Mhm.
Uh, I can go over, 10x return on ad spend and 20x, 30x return on ad spend campaigns, telling clients to scale at a 3x return on ad spend on pixel data in most cases. So I could talk about what the total budget could potentially look like percentage wise towards the total raise and would tell you I'm generally not telling a client to put that aside at the beginning as much as find a comfortable yet meaningful enough budget towards their timeline. Look at it as a marketing test and then scale up as we're seeing performance, scale up as we're seeing results. But I would do that aggressively, meaning once it's converting, you have a time clock staring at you on these crowd sales and these initiatives. You really need to ramp into it and ramp into it quick. That's what the top founders are doing on these deals, and we're working on behalf of them. So, putting together a marketing campaign, figuring which channels you want to test and test early, figuring out the best ways to reach the audiences you need to. We've built a database of over 1.8 million historical, I call them equity crowdfunding investors. I
Okay.
could tell you some have over 100 of these deals in their portfolio. If I'm uploading them as a custom audience to an ad platform, if I'm advertising directly to them, uh, I'll likely outperform a group that is, just doing broad targeting or using some of the third-party data available on these platforms. So you want to find different access points. I would talk to as many professionals you can around it. I'm always giving people advice. I want to see a higher success rate industry wide. I wouldn't be shy about that. I would talk to as many people who point you in the right direction, give you tips. Be upfront. If you, can't work with them, they'll still have a chat with you, or if you
Sure.
may be able to bring them in down the line. The success rates for capital raising are not great. VC angel level, I found stats where it's 4% under on deals. On
Yeah.
Reg CF, it's only 10% of companies that raise $1 million or more. Some companies may only need a few hundred grand. Happy to say we work with many of those.
Yeah.
We work with many of the top 1% that hit the full level. But I would pay more attention to that full goal and how you're getting there versus some of the initial spends, some of the question marks you may have on whether it's going to work or not. Go all in,
Cool. Yeah.
do it and do more.
Love it, man. So I know we're coming up on time, but is there something that you would want to cover, or a question that I haven't asked that you want to make sure that the audience hears?
I would tell you that companies that why even look at this, right?
Mm-hmm.
Um, why not just operate your business? And I'm not out there telling every company they should do an investment crowdfund campaign or even that they should be capital raising. But what I would look at is companies that are undercapitalized fail,
Yeah.
plain and simple. And the success rates are not good for companies under 5 years. You should probably be looking towards your next round and your next round early. And these are channels that you can use to not only raise capital, but if you're getting a strong return off it, essentially getting a free marketing campaign as part of it, bringing in a large audience, how many impressions are taking place, how many new signups for your email and for your database and your social channels are you getting, how many investments are you getting, and the people in between that you can use towards the next round. What does that mean for the space? The first Reg D we worked on, the client was featured as a Forbes 30 under 30 for energy and pointing at the success of this campaign. I've had companies work with me on 6, 7 rounds. Some of them started at $20 million valuations and are $3 billion+ valuations now. So you getting not just the proceeds and putting them towards your next goals, but all the press, all the notoriety, everything that comes along with the success of one of these rounds. So if you're not using it, I definitely think it's something to be educated in, something to have as an option. And whether you're going down this route or whether you're bringing a strategic investor, someone from your vertical, your success benefits theirs, you're able to close your round with one check and be in a much better place to do so. As a CEO, this is definitely the way you want to be thinking, whether you choose to go down this path or not.
Right. Having a better launch pad gives you more momentum, yeah, every time, right?
I think so.
Most times, yeah. Good. Well, Jason, man, I appreciate you being on. Where can somebody reach out if they're interested in learning more?
Sure, sure. Well, I'll point you three areas: our website, digitalnicheagency.com. Definitely want to highlight our youtube.com/ at digital niche agency channel. Have the podcasts, all different types of educational content pieces, a lot to really get more learnings from, even different templates. Or reach out to me on LinkedIn, Jason
Yeah.
Fishman, Del Rey, DNA. Don't be shy. Always happy to connect and have a warm marketing conversation.
Awesome, Jason. So thanks so much for being on. Appreciate you and look forward to your continued success. Hey, that was Jason Fishman, founder of Digital Niche Agency and host of Test, Optimize, Scale, which kind of he alluded to later on in the episode. So if you want to see how a real performance marketer thinks about testing and attribution and scaling paid campaigns, go to his podcast and subscribe there. It's on YouTube and everywhere you listen to podcasts. And if you are running a professional service firm, that conversation that made you realize your website or intake process isn't ready for paid traffic, then you should talk to us. Head to codeconspirators.com, book a free assessment. We will show you exactly where you're losing leads and what to do about it. Show notes are below with links to the tools that we're talking about, and the full transcript is available there as well. Thanks again, and we will see you next time.